Hello, welcome to my show Power in Politics. Today we are going to discuss how gold has become a new bold investment in India. Gold's ruthless rampage, from sacred savings to speculative slaughter, that's the journey gold has taken for the past 1 decade. Gold at 1 lakh 10,000 rupees for 10 grams? Unimaginable. But it's a fact. It's happening. You can see in the market. It's not just a number you can scroll past on a screen. It's a sentence that lands heavily in an Indian home, in small cupboards and steel safes, in the hearts of families who once saw gold as a quiet promise for future. For years, gold wasn't an investment. It was an emotion. It was security that you could hold and trust. It was the glimmer on the bride's wrist, the comfort in a grandmother's coin box, and the assurance that no matter what happened, something of value would remain with us forever. Now that emotion has turned into a market chart, a flow chart, a pie chart, whatever you want to call it. A figure flashing on trading terminals and news tickers. The old promise has been rewritten by the logic of finance and markets. Think of the math. In 2015, barely a decade ago, gold was around 25 to 30,000 rupees per 10 grams all over the country. And now, at that time, families planned their lives around that figure. A wedding, a festival, a few bangles saved up for every year, for the wedding purposes or for any other festival. It was possible. Now the same metal costs 4 times more. The same wedding list has been torn up, rewritten with hesitation and some pain as well. For millions of middle class and lower middle class families, gold has moved out of their reach. The once attainable has become aspirational again. And yet, somewhere else in the system, gold is thriving. On the stock exchange, whether it is Sensex, whether it is NSE, in apps, in the digital vaults of custodians and fund houses, it's showing a brighter side all over. Gold has become an asset class. Exchange traded funds, sovereign gold bonds, digital gold wallets, what were once bought from the local jeweler is now traded with a swipe or a push of a button. Gold ETFs alone now manage more than 60,000 crore rupees, which people have invested. The quiet purchase of a bangle has turned into a financial transaction through technology. This shift didn't happen overnight. It has been building for a decade. India's demand for gold has always been resilient. Even at record prices, the country buys 700 to 800 tons of gold every year, much more during the festival season like now. Because here in India, gold is not just luxury, it's an identity. It's how families express belonging, status, and care for their daughters, sisters, and brothers. But when the rupee weakens, every gram becomes costlier. We are linked with the dollar. Gold trades in dollars, so when the rupee slips from 72 to 87 against the dollar in 10 years, the impact is immediate. Without any global change, domestic prices start climbing when the rupee starts falling. Then there are policy gaps in between. Import duties go up or go down depending on the mood of the nation. GST rates shift whenever the council decides to do so under pressure. Small uncertainties push people to buy early or hold more. That rush fuels the next price spike. And beyond India's borders, the world's central banks, including our own RBI, have quietly re-entered the gold market. China, Russia, even the Reserve Bank of India are all buying gold again. For them, it's not nostalgia, it's an insurance. Against what? That's the question being asked, why the government banks are buying gold in such a large quantity. It is insurance against currency volatility, against geopolitical risk, against the dominance of the dollar. When central banks buy, private buyers feel the squeeze because the availability of gold is limited. The problem isn't that there is less gold in the world. Global mines output has stayed fairly stable around 5,000 tons a year. The issue is who controls that flow and how its price is set, whether domestically or in the international market. Local jewelers no longer shape the market. Global capital and markets do. The price of a necklace in Jaipur or a coin in Kochi now depends on trading floors in New York and London and Mumbai, not on small gold markets anywhere. This is where gold's double identity becomes clear. For investor, it has never looked better in the past. It's liquid, tradable, and a proven hedge. In a decade, its rupee price had quadrupled 4 times. Long-term holders have seen double-digit annual returns, more than what the stocks market could deliver to a petty investor or retail investor. But for families, it has become unreachable, particularly the lower middle class family. The emotional act of buying a few grams of each year as saving for the future has turned into a financial impossibility. Gold, which once bound families to stability, now reminds them of exclusion at the lower strata of the society. Gold's journey from heirloom to asset class has efficiency on its size. That's taken for granted because technology comes in the play. The financial system has made it easy to buy, easy to sell, and safe to store without any extra cost in terms of lockers. ETFs and sovereign bonds let investors participate without worrying about purity or theft from home or anywhere else. But markets, while efficient, can also be indifferent to the sentiments. They don't account for cultural identity, affinity, and future security for the Indian middle class. They don't see the difference between a hedge and a blessing. The question is not whether gold as a financial instrument is good or bad. That is settled. It's about what happens when financial logic overtakes social purpose, particularly in a country like India where family values still matter. When a couple can't afford the gold their families plan for their marriage, when parents discover their lifelong savings now buy half the weight they once could do earlier, when gold stops being a source of comfort and becomes a source of stress, something is somewhere lost. Not just value, but its meaning altogether. India stands at a crossroads in this story. It's unique. You don't see so much of love for gold as we see in India. All over the world, you don't find ladies and women dressed in gold or loaded with gold. We are both the largest consumer of gold and one of the fastest modernizing financial systems in the world. That combination can be powerful if managed right. Policy can make gold more inclusive again. Small, easy to buy sovereign gold bonds, simple ETF access through mobile apps, transparent pricing, etc. will help Indians to accept the transition comfortably. No hidden fees. Let every Indian have a way to own gold, even if it's digitally, even if it's a fraction of a gram. That's the beauty of market-led gold marketing. This is how we preserve what gold means while accepting what it has become now, from metal to market. Because gold in India is not going away. It is too deeply woven into our cultural and emotional fabric. But it can evolve. It can live both in our homes and in our portfolios. It can be both sentimental and strategic investment. What we must guard against is exclusion by price. Gold should not become a privilege of the few classes. It should remain a symbol of trust for the many and not for the chosen few. The government, the markets, and the financial institutions have a role here to build systems that protect the cultural bond while expanding financial access. In the end, gold reflects us. It shines with our contradictions. It's ancient, emotional, traditional, and yet it's the part of modern algorithm and global indices. Its value is both sentimental and mathematical. Its future depends on how we manage that tension. The tension between what gold means to our hearts and what it means to our balance sheets and to our portfolios. So when you hear that gold has crossed 1,10,000 rupees per 10 grams in a city like Delhi or Mumbai, don't see it only as a sign of rising wealth or inflation. See it as a story of change, a story of how India's most emotional asset became a global commodity. A story of families adjusting their dreams and investors chasing new returns. A story that asks whether the metal we worship will still feel like ours when it is ruled by markets. If India can find balance, if it can make gold accessible yet efficient, emotional yet investable, it will achieve something rare. A financial evolution that keeps its soul intact. Gold can still protect households, anchor portfolios, and connect new generation and future lifestyles. But only if we remember that its true worth is not just in what it's worth today, but in what it has always meant to Indian families and Indian middle class. That more than its price is what makes gold truly shine. In the coming decade, India's relationship with gold might just define how we manage the tension between heritage and modernity, emotion and economics, tradition and technology. That's all for today. We'll meet again and discuss the next topic. Till then, goodbye. But before going, I want to make another request. Please subscribe to my channel, watch it completely, paste your comments, good, bad and ugly. I can assure you I will not mind. Namaskar, Jai Hind.